Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. As you know, 1 Million by 1 Million is the first and only global virtual incubator accelerator in the world, headquartered in Silicon Valley with a global footprint. And our goal is to help a million entrepreneurs reach $1 million and beyond in annual revenue, build $1 trillion of global GDP and 10 million jobs. It is a rather ambitious mission, and its only justification for existence is to help you, entrepreneurs, succeed. The only reason we are here is to help you. So this is our 204th roundtable. It's been going for a while. Over 25,000 people have been here, and we hope to continue to be able to present this program to you for a while longer. The event is being recorded. You will have the recording available on the blog as well as on our YouTube channel. I will give you the details in a moment. If you're live tweeting the show, the hashtag is 1M1M, and the Twitter handles for 1M1M are at 1M by 1M and @Romana is my personal handle. We feed a lot of rich content through those channels. And the YouTube channel is 1M1M Roundtables, and you'll find this as well as all roundtable recordings on the channel. So lots of material that you can play around with. These are the call-in instructions. We're not quite ready for you to call in. We are going to have a lot of interesting stuff before we open the lineup for calls. But do make note of the call-in instructions, and when we are ready, I'll put the slide back up. So as you know, we just launched the Carnival in the Cloud book, and we are having a series of launch events at these roundtables with very special guests that we have invited. Carnival in the Cloud, by the way, is a book that has about 15 case studies of entrepreneurs who have built really successful, interesting cloud businesses. And it spans a pretty long window of the last about 15 years or so. And lots of interesting strategies, lots of nuances. Some are, bootstrap businesses. Some are heavily venture-funded businesses. Some are unicorn companies, billion-dollar companies. So it's a great romp through the entrepreneurial universe of what has been one of the most productive sectors of the industry in terms of entrepreneurial success. So we do believe that there is still a lot of growth in the industry, and a lot will happen around the world. And because we believe in that around the world phenomenon, today's guests, we have two very special guests who've been doing phenomenal work in the Indian ecosystem. I would say their contributions in growing the Indian entrepreneurship ecosystem is disproportionate. Sharad, co-founder of iSpirit Foundation, and Ravi, Gururaj, head of the NASSCOM Product Conclave and the Executive Council of the NASSCOM Product Initiative. Both are angel investors, mentors, as well as playing huge roles in bringing the ecosystem together in India. So welcome, Sharad, welcome, Ravi. It's a real pleasure to have you two today to kick around what's happening in India, what needs to be done, what are the bottlenecks, what are the great milestones. So,
good morning, Sharma. Delighted to be here.
Thank you, Ravi. So we will start with asking them for their high-level perspectives of the Indian ecosystem vis-a-vis cloud entrepreneurship. Cloud has been actually a very productive area of entrepreneurship for the Indian product movement. Those of you who follow the industry, you know that India has come from a services background. It's been one of the biggest IT services success stories in history. And today, that industry has matured to a level where we are seeing a lot of product companies emerge. Some have reached some scale. Zoho is probably the one that people cite as one of the biggest examples of a success story out of India. But then there is a new generation of companies that are also coming up. So Ravi, why don't you start us out with giving us your thoughts on what is the general direction of the movement?
Sure. I think, the product ecosystem in India is, ripe at an inflection point in my mind. We've seen a few years of good growth. We've seen the development of great role models. I think the world is flatter than it's ever been to build a company from anywhere in the world and to serve the globe, right? I also think, the economic and political and regulatory environment will, over the next few years, ease up dramatically in India to help nurture entrepreneurship and to aid in investments both domestically and internationally flowing into startups here. I think, assuming the new government that we have in place now for the last few months does all the right things, and they've shown every intent of wanting to do that, we will be in a great, I think, a rising kind of tide over the next few years in the product ecosystem. We already have many companies building product for both India and the globe from out of India. I think some of those companies have very audacious ambitions, and I've met many entrepreneurs here who are in the process of, even growing their enterprises to have foreign offices in Silicon Valley and New York and all of that. So it's a good sign of how we're progressing. There's also great interest from lots of the platform players around the world and product companies around the world looking to India to understand how they can take advantage of the innovation. Now, all that said, there's a little bit of noise on the line. All that said, I should caution that it's still a nascent ecosystem. We still have a long way to go. Compared to Israel, Silicon Valley, I still think we're very, very nascent, but the opportunity is tremendous. And I think we will see tremendous growth over the next few years. I think, we already have billion-dollar companies. We've had a slew of fundings of companies across the board. And I think, I'm very optimistic and very bullish over a medium to long-term perspective. I think, it's hard to move the needle in the very near term, but I think over the long term, it's going to be a very, very fun ride over the next few years here from India.
Sharad, you have been investing in cloud companies for a while. What are you seeing? What is your general directional feedback?
I think, I echo most of what Ravi said. I think the big change is that that the remote selling or desk selling has opened up a whole new opportunity. So especially if you're focusing on the mid-market, even if you're based in the US and you're selling in Atlanta, you're going to do most of it sitting from your desk. And so at one level, it doesn't matter whether you are in Silicon Valley or you are in Chennai. So that evolution of the sales model, the opening up of the mid-market, which has only been possible because of the cloud being the delivery mechanism, I think has opened up a very big market for everybody, and India is participating in it in a full way. And I think in narrow niches, we're beginning to see players out of India starting to emerge as possible category leaders. You mentioned Zoho. Clearly it's in a big space. It's done very well for itself. But there are lots of baby Zohos that are coming up. One of your portfolio company in which I'm an investor is Orangescape, and Kitsflow is witnessing that. The product Kitsflow is witnessing that as we speak. So that's the big shift. I think I still continue to believe that that infrastructure companies will also do well, even though they have a field sales force that they need in the US, because the companies are doing a very good job, much like Israel, of moving their base from India to the US, especially for sales and marketing. And the company that you often highlight as the poster child of India, and I'm always delighted to hear about that because I'm an angel investor there. Dhruva is an example of this. And Dhruva may well turn out to be the first in pure tech company to go for a US IPO 18 to 24 months from now. So I think overall things are trending in the right direction. There are lots of things to do on the ecosystem side. There are gaps that need to be filled, and organizations like NASSCOM are playing a role, and of course iSpirit is very active there as well.
So folks, just to give you a little bit of color on a few things that Ravi and Sharad have said, the Zoho trend, what Sharad said about baby Zohos, there are actually a lot of companies that are doing something in the cloud, selling into the small, medium market, and these are online customer acquisition strategies, so they can be done from anywhere. One of our earliest portfolio companies that has gone on to raise like $44 million and has just touched the milestone of 30,000 customers is Freshdesk. It's a team that came out of Zoho and has come to compete very effectively with a public company called Zendesk. This company is Freshdesk, and it's an example of the baby Zoho trend. They have crossed $10 million in revenue. And Dhruva, which was also discussed by Naren Gupta last week, Dhruva has now crossed 10 million a quarter, whereas Freshdesk is 10 million a year. Dhruva is now at 10 million a quarter. It is doing enterprise sales around the world. Both companies have moved their headquarters now to San Francisco area, but they both operate as very sizable Indian companies. So let me actually kind of parse out everything we heard into a few different categories and maybe double click down on each of those. So there are essentially 4 categories of cloud businesses that Indian entrepreneurs are building right now. One is enterprise software selling into the Indian market. One is enterprise software selling into the global market. The third is cloud software selling into the Indian mid-market and small businesses. And then we have the cloud software selling into the global market. The 2 companies we've discussed so far, Dhruva and Freshdesk, Dhruva, Zoho, and Freshdesk, actually 3 companies. Dhruva falls in the enterprise software category, cloud, but enterprise, selling into the global market. Zoho and Freshdesk are mid-market and SME software categories, cloud software, selling into the global markets. Now, that still leaves a couple of other categories that we have not yet discussed. One is enterprise software selling into the Indian market, and 2 is mid-market software selling into the Indian market. Now, enterprise software selling into the Indian market, we have a good example, actually, Sapiens, which I think at least one of you are probably an investor in as well. Sapiens has built up, some level of revenue selling into the Indian market. And then there's been a very big initiative from iSpirit very recently, which is to really nurture companies, cloud companies selling into the Indian mid-market. So Sharad, you probably would be the best person to start talking about the mid-market Indian companies.
Yeah, so in the the Indian mid-market and the small market, I think there are 2 different price levels. There's very interesting stuff that is happening in the mid-market. The volumes are still small, but the market is starting to grow reasonably quickly. But the real action, I think, from my perspective, the most exciting part is actually the small market, and these are companies like Practo, which are essentially selling an ERP type solution to individual doctors at 1 rupee an appointment, and as you know, that's so 50 appointments will cost you $1. So they are radical. This is really micro-pricing at work. There is another company called Creative, which is selling a payroll solution, which is actually quite good because Intuit uses that payroll solution both in India and Singapore. They haven't deployed their own solution in these markets, and they sell at 10 rupees per paycheck or per person per month. So essentially you get 20 cents per person. So you have an HR solution from EmployeeWise here, which is sold at 50 cents a person a month. And these are these are, very good quality solutions. So what they're doing is they're using this radical pricing, nano pricing, to overcome resistance, adoption resistance from very small businesses in India. And for this model to work, they literally need 1 million customers, because if they don't get to 1 million, 2 million, 3 million customers, this business is not material at all. And I would watch out for these companies, because once they crack the Indian market and get to 1 million customers, their ambitions will grow and they'll go after other markets as well, and they'll therefore have a fairly disruptive impact over a period of time. And remember, there is an Indian company which has 1 million business customers, and that is the QuickBooks of India, and that is Tally, and that's also been very aggressively priced, and that is how they cracked open that market. So I think there is excitement on the India market side on both fronts: the small business where nano pricing is being used, and the mid-market business, where there's still friction to selling, and that is where iSpirit is playing a role in 2 ways. One is by running a program called Software Adoption Initiative, which is educating the buyers. We run something called BIBE workshops at scale. We've done 6,000 of those workshops so far. And BIBE stands for Be an Informed Buyer. So it's actually buyer-facing. You educate them so that they move from being a latent buyer to an actual buyer. And if everything goes well, we'll announce hopefully in November or December that we shall do 50,000 BIBEs next year. And that's going to materially change the marketplace in India in the mid-market level. The second part that we are doing is actually, Sharma, you've been a jury member there as well. And we've selected 8 companies who operate in the India-facing mid-market space. And we brought the successful entrepreneurs, like the co-founder of and CEO of Zoho, and many of the people that have been profiled by Sharma before as mentors for a year, so that they can find ways to grow their business in an accelerated fashion. So I would say, from a VC perspective, the Indian market is not very attractive. It's very hard to attract capital right now. But there are systematic efforts being made to change that, so that you get higher velocity, and therefore it becomes an in-fashion market, hopefully a couple of years from now.
It's going to take a little while for the market that Sharad just talked about at length is a market that generally does not grow at VC scale. VCs want to see hockey stick growth curves, and that's hardest to see in that market. Yet, it's going to take a bit of time and that velocity to increase. So it will be for a few years before that market becomes of interest to VCs. But the market that is actually of great interest to VCs right now are Indian companies like the Freshdesk, Dhruva type of companies that are actually going after the global market. So Ravi, you have NASSCOM Product Council coming up, and I saw on Facebook that you've already sold out the conference. What's on the agenda, and how are you seeing this VC interest in the Indian companies selling into the global market?
Well, there's lots of interest, and that interest doesn't always translate into fundings. I think people are still cautious, as Sharad said, especially where the play is at least partly domestic, right? The strategy of selling for the venture. So I think you're starting to see some of the companies have to build hybrid strategies where they have a market that faces the U.S. And serves India, where they have actually interest in serving both markets, or they go pure global, right? And where they go pure global, as they scale out, they start to build a minimum viable product. They start to get some traction, and they go global. They have to be in the markets, right? So they're serving that are dominant in their revenue streams. I think the Product Conclave is one of our events. It's our annual watershed event that we have, where we showcase, we help people connect, we bring the community together. We have an awesome cast of characters, and we've brought I would say almost all the big top entrepreneurs to the event, both across the Indian landscape, and we've brought several of the top entrepreneurs from around the world. For instance, in the cloud space, we have Dheeraj Pandey of Nutanix. We have Hakan Manna of Nexenta. We have BB Jagdish, who's done a couple of cloud startups. We will be speaking here. Pramod Haq is coming out. So it's a, I don't want to read out all the names. There's, your favorite VCs like Dave McClure and others also coming out. So it'll be a fun 3 days. And, I think it's much more about, connecting people, bringing a sense of confidence in wanting to work with India, exposing the entrepreneurs we have here, that they have the potential to be world-class, and some of them are already performing at the world-class bar. So we will have 125 companies that will be showcasing at the event for the first time. We will then be, if you remember, Sharma, you were there in Silicon Valley when we brought out 30 entrepreneurs. Next year, we'll be bringing out 100 entrepreneurs for an India Innovation Week in Silicon Valley. And it's basically to help, again, connect. So that's one area in which we work. We also have a 10,000 startups program that is tackling the base of the pyramid, of the entrepreneurial pyramid, from where we see some of the more powerful, innovative ideas of the product space emerging over the next couple of years. For instance, India is primed for a mobile-only play. And I think, while Sharad has listed out several very good companies, those plays a little harder because of the skills gaps, because of lack of connectivity, because not everybody here is connected on the web in the traditional sense. But I think India can leapfrog, and some of those companies can actually achieve the huge numbers, the million-plus subscribers in a mobile-only world. And I think there's some huge opportunities there to be tackled, especially if the design of the product is mobile and mobile first and mobile only. And I think that's where, so we're going to see some real innovation. I also think there's lots of innovation to be had in India in the IoT and software space. That combination is going to be very critical going forward. The world is going to be a combination of product. It's going to be a combination of product, hardware, solutions, and data. And it's primarily going to be about delivering experiences, in my opinion. And people are going to be buying experiences, both on their mobile, on their multi-screen kind of environments, in their TVs, in their cars, wherever it is. And fundamentally, all of us entrepreneurs are going to have to gear up for that world that is a converged world, where you have devices at the edge, you have logic at the core, and that combination is going to provide a magical experience for the user. And I'm encouraging our Indian entrepreneurs to start thinking 3 years out, and how do you provide that magic out of India? The Nest kind of magic, right, that Google was so enamored by. I think there's opportunities there as well. And finally, I think, an area where there's huge opportunity is in a headless ventures, i.e. headless products and offerings. That is the API economy. That's an area where India could do very well. We sometimes ignore that area, but it's a huge opportunity, both to serve within India, because there's a whole bunch of government organizations who we're working with at NESCOM to help them expose their APIs. We're working across the board with some companies that could actually benefit from providing their data and their logic capabilities to others that could consume them at higher layers in the stack. And I think the one benefit you have in tackling the India market, while I understand it's hard to break into initially, is there's very little legacy baggage. There's a lot of greenfield opportunity. Lots of the mid and SMB market has never even touched IT, and there's a huge leapfrog opportunity. As we get always connected, shopkeepers, retailers, auto rickshaw guys, across the board in every aspect of life, as the endpoints are going to get connected to the cloud and permanently so, that's going to open up huge opportunities in my mind for entrepreneurs to come in and build beautiful differentiated solutions that can capture value. And I think we're going to start seeing that. I think, those are some of the areas, and I think obviously, you've got vertical opportunities as well in India. Sapiens is one example of that. There's others that we've seen that have started to take off in various areas where they can serve vertical markets. And India is a land of opportunity because we have so much resource leakage. We have such poor infrastructure in many cases. We have so low penetration of IT. Productivity is low in many areas, low enough that you could add up what I call the 1%. That is, if you can find a big enough market, and India has many big markets, if you could improve 1% in a few different small silos, as long as the target market is large enough, I think those 1% can really add up to huge value for entrepreneurs who can identify and solve real problems and provide solutions to improve and optimize, So again, I think, lots of opportunity, but, there's a big slog ahead of us, that's for sure. There's no guarantees any single entrepreneur will do well, but I think, we have enough people trying and enough passion, and I think enough perseverance that we're going to see some really good outcomes in the next few years.
So on that note, my next question is, what do you see? And of course, we see a lot of Indian entrepreneurs as well, so that all three of us have a lot of exposure to the Indian entrepreneurship community at this point. What are you seeing in terms of the psychology of these entrepreneurs? Are they going to be patient, and are they realistic about what it is going to take to build these companies? Because it is going to take a long time for them to, fully work through the market development. The market itself is immature, and the pace of adoption of these, as you said, greenfield customers. They don't have legacy baggage, but at the same time, people who have not purchased software before or have purchased a lot of IT before tend to be slow and unsure in their buying cycles.
Yep.
How do you see?
No, I agree, and that's why I think the mobile-first opportunity is tremendous. I mean, when was the last time you opened up a help manual to use a mobile app? You never did, and that's what we need. We have a skills gap in India. Something has to be very easy to train on, to use immediately out of the box, right? And so I think, that's where I see the mobile app being extremely, in terms of adoption, very low friction. I see that being the model going forward for the vast majority of successful software entrepreneurs in India. And I think, it's going to require a different mindset. You got to kind of think different here and when you're building this, because you don't have necessarily great proxies from Silicon Valley for that, because even Silicon Valley is figuring out how to go mobile only. It's all fresh for everyone, all of us, and a small team here can execute just as well as a team in Silicon Valley on that front, if they can put the right talent together. I think design talent, user experience talent, I think, the right mobile engineering expertise and the growth hacking. If they can put all that, I think we have the other pieces of the pie, in place. So I think, the entrepreneurs, to your earlier question, are they resilient? I think, you'll find a subset of them are. The folks you mentioned, Jaspreet, Girish from Freshdesk, those guys are resilient, but they're the pick of the litter in some sense, right? They've been successful already. So a little bit of adverse selection in picking those names out. But, when you look at the average entrepreneur here, they are very passionate. Their passion probably exceeds their skills today. I think their drive probably exceeds their resources, but I think we'll get all those four elements up there over time, right? I think, you're going to find a couple of generations later, you're going to have, several generations of folks who've been through 2-3 startups, and they're going to have learned a lot. And they're going to be able to spin off a bunch of companies. You're already seeing that. The InMobis of the world have many startups. The Burps of the world have many startups. You're starting to see companies that started 4 or 5 years ago now have, several of their offsprings, so to say, alumni offsprings, right? Build companies. And I think that's just going to cascade, as we see the tree grow in some sense.
One of my favorite examples actually is Girish Raoji, not Girish Mathrubootham, but Girish Raoji, who is the CEO of Greytip. This company has been around for a long time. They do the paycheck. It's kind of like the pay cycle equivalent for India. And Sharad mentioned it earlier. The company has been around for a long, long time. And again, because it has taken a long time to build the company to a certain pace, the growth has been linear, lower velocity, and that is the dynamic of a market that is just starting to happen. So for the entrepreneurs, yes, there's a huge amount of opportunity. The combination of cloud and mobile is a phenomenally powerful combination. You can deliver value through a mobile interface, but with a cloud service in the back end. This is a very powerful disruptive force, and presumably there's going to be a lot of interesting success stories coming out of this, and many of you are going to be building those success stories. But please keep in mind that it is not going to be an overnight process. It's not going to be a high velocity success. In the US right now, cloud businesses are scaling at a phenomenal pace. If you look at the pace at which a company like Marketo has scaled, it's immense. That kind of velocity is not going to be available in the Indian market. So there's going to be a lot of slogging for a number of years to build businesses facing the Indian market, because the adoption pace is slower. So be realistic on what you're getting into and what you're taking on. So on that note,
I would like to amplify, Samanna, if I could just add a few minutes to what you're saying. And I think, therefore, it is vitally important that we promote bootstrapping. The Great Tapes example, the Apartment Adda example, because it will take a long time before they get into this predictable, hyper growth, which is where, at least VC capital can come in. And so right now we are overly focused on celebrating the Silicon Valley model, while we know for sure that is not the appropriate model, right? I mean, for example, if you take this mobile example, the most successful company in that has been NewsHunt, and that grew on the back of the same, bootstrap for a long while before you get ready for VC capital, kind of a mode, and that is not changing. And so we need to make sure that we don't get captivated by, taking this faithful replica of the Silicon Valley model here. And we have to be very grounded because A, the customer situation is different. B, the amount of capital, risk capital available in India is very, very low at this point in time compared to the demand for that capital. So I think you're absolutely right. I think we need to celebrate bootstrapping much, much more than we do today. And let's stay focused on that mission as well.
Ravi needs to drop off. Sharad, are you staying for the rest of the session, or do you need to drop off as well?
I am, Samanna, in Delhi. When I signed up for this, I was going to be in Bangalore. So I am in Delhi. If you don't mind, I would love to drop off. Then I can get back to my hotel.
Thank you very much, Sharad and Ravi, for being here and giving us your perspective of what's happening in India. Good luck with all your initiatives with iSprit and NASCOM, and we will continue to collaborate as we go along. We are going to switch to the entrepreneur pitches now. The first presenter today is George Vetat. George, if you could please unmute your line and tell us what you're working on. George, are you there? What's happening? Is George on the line? Maureen, do you want me to advance to somebody else? George, you need to call in. It's your turn to present. All right, folks, Maureen, I'm going to give you a couple of minutes to just get the logistics straight here. Just want to highlight one thing that came up at the very end of the discussion with Ravi and Sharad. About, we are celebrating the Silicon Valley model of venture-style startups all over the world. Some of you may have read an article that I wrote this week on LinkedIn called "Entrepreneurship Does Not Equal Financing." And part of the problem that we are kind of propagating as an industry all over the world is that we are propagating this model of venture-style business building everywhere in the world. And most of the world does not have a market, as we discussed, in India does not have the markets that can support venture-style businesses yet. The market is being developed. and in some cases, the seed ecosystem, the risk capital needed to develop businesses with a venture capital style investor structure does not exist either to that extent. So in those cases, you have to kind of very realistic and pragmatic about how you're going to build your business. And yes, bootstrapping is something that we have to be use, as the most pragmatic and available methodology of building businesses. So please, keep that in mind, that if you're in India or if you're in South Africa or if you're in somewhere in Asia where the market is immature, the venture capital ecosystem is immature, you're going to have to. Are you on the call?
This is George here. Yes, I'm on the call.
Okay, great. Just a second. Priya and Raghu, if you could put your lines on mute so that we don't stream any noise into the call. George, it's your turn to present. Please make sure that your computer is on the mute and you only speak through the phone so that it doesn't generate. Go ahead.
Okay. Yeah. Good evening, everyone, and good morning to you, Sharma. I've read a lot of your books and heard a lot about you. It's great to be able to present to you. And hello, Sharad and Ravi. I think I know both of you, so hi. Okay, this is to present about us, fellows. We are I'd say 11-year-old startup, and we've been around in the enterprise application space for quite some time. And I'll just go first directly into our value proposition. We have a bunch of products, a bunch of tools, and we provide services for small and medium businesses, initially in India, and then we've also now spread out to the Middle East and the Far East. But what we'd like to really talk about as value proposition is an underlying R&D that we've been doing internally. Our focus has been using model-based development since 2004. We've been spending time in continuously automating the process of software development. Now that's an internal R&D. That's something that any PaaS developer would do. And that's something that usually people put out on the web and allow others to use. Instead, we've chosen to keep it internal and use and build our own products and services to customers using this PaaS. Now, what that does is allows us to cater to customers and give them the benefits of the PaaS and our products in terms of effort, time, cost, risk, and quality. This is also essential or a vital aspect to sort of stay competitive in a very competitive Indian market where price expectations are very low. Now, if you notice that there seems to be a lot of products out there, and everyone will ask, why are you there in so many products? The answer is there's a meaning behind all these products. If you see those two products out there, one is HRMS and the other is ERP. Both of them are backbone products. They're horizontal. They're meant to provide a backbone around which one can develop a supply chain specifically for organizations. So we've seen that we could use our backbone HR and ERP. It's a fairly strong HR and ERP competing on its own against ERP and HR vendors. But around that, we provide unique value chains using our PaaS, and therefore we're able to deliver complete large footprint solutions to customers at prices and time frames which are not normally possible. And this effort in R&D and automating software development is what is making this possible, otherwise it's not possible. Next slide, please. So what's our target market? I mean, it seems to be a generic market, but actually it's very specific. We are going after underserved verticals. There are lots of sub-verticals out there which are not catered to by the large enterprise players. It's not necessarily at that high level called professional services or wellness, but really going down one level below that. Like if you go to construction, it's infrastructure construction would be very specifically a sub-vertical where there are no solutions. Even international ERPs, when they come down to third world markets, they don't cater to them because the processes are different. So what we do is we go to customers who don't find the product. They're looking for products, mid-market customers. They don't find the product, find custom development too high, finally stick with Tally, and that's why Tally is doing so well, and don't use any solution. We go to them and say, look, it's now possible. Don't think that it's something that's impossible to do. Even if you don't find a product, we use a backbone ERP, we use a backbone HRMS. We'll develop the value chain specifically for you and deliver. We make unviable projects viable. And we have done a large number like this in sub-verticals in India, Middle East, and Far East. These are the websites are mentioned below, and those are our individual websites. They're also sold individually as products, but we also provide large footprint solutions as a complete solution. Next slide, please. So what's our go-to-market strategy? In India, it's very direct. We meet CEOs directly and ask them if they have this problem where they don't have a product that fits their need and custom solution is too expensive, and then go and tell them we can do it this way. And some of them buy it. We've decided to scale up through partners because we are a bootstrap company, completely bootstrap, no funding so far, self-funded 100% and customer-funded, I'd say 100%. And what we're doing is creating small practices with partners. We ask a partner and tell him, trust us with our products. We give our full products. You can now scale up from being a typical reseller to a solution provider. We will back you up and provide you the entire solution. We've been able to do this successfully in a few cities like London, Singapore, Dubai, and Muscat. They've started with small orders, but that's our growth plan. We want to build a large number of practices. I think our role model is a company called Sage in UK, which has done that, creating partners around the world is what we want to do. So our scale up is more partners, more geographies, more products. It's very easy for us to create a large number of products because of our rapid application development tools. Larger deals. We're seeing now as deals are getting larger. But technology-wise, we still will retain that goal of complete development automation. I know it's something that people sort of give up finally, but we do want to keep tracking and hitting at the goal of making development completely automated. Next slide, please.
George, before you carry on, a quick question. What are your average deal sizes right now?
That's then the next slide. It's put up there in terms of in bespoke projects, it's 25,000 USD. It varies actually. Sometimes as small as 3,000 to as big as largest deal is $100,000 case. Where we did about 11 applications for a customer. And around our products, by the way, we have one product on a SaaS model also because we wanted to be sure that a technology can handle SaaS and cloud and all that. So technologies. And so we have a HR product which competes against both the products mentioned earlier, Great Tip as well as EmployeeWise. And we're competing head-on against them in some markets. And a self-service product actually, full suite, complete HR product. And that's also got a SaaS revenue on a continuous basis. So both products and in projects we are competing. And we get more business from a few verticals like professional services, construction, trading, and financial services. We don't get business from where the ERPs are strong. Sorry.
What percentage of your business is Indian business versus UK business or Dubai business?
Yeah, until 2 years back, it was 100% India. We just concentrated, in fact, on one city in India, but we slowly spread on to other cities. And this year, I'd say that 70% is coming from outside India, and only 30% is from India.
I see. And what level are you at in terms of revenue?
Yeah, that's very low. I think we are currently at, I'd put it in lakhs as we are slightly more than 1 crore, and that I'd say primarily because our intent is really to buy our customers. We just take enough revenue to make sure that our our R&D goes, our products mature. We've not really gone into the market. In fact, we don't even have a salesperson on board. I mean, we just go more by referrals.
Okay. Okay. So you have a bunch of interesting things going on here. You have a product, you have a platform as a service that helps in rapid application development, but you do have a somewhat haphazard strategy. And so whether it's scaling as a bootstrap business or scaling as a funded business, haphazard strategies don't tend to produce scale. So you're going to need to streamline your strategy to get it to a point where things become a lot more repeatable. One of the areas where we do a lot of work and what you call growth hacking, right? this is one area where growth hacking works really well, is to really kind of like work out your business logic in a way such that you derive the highest potential areas and put that on a repeatable sales model, marketing and sales model. And I think if I were to look at your business and what would I do if I were running this business, that's what I would do. I would kind of really understand the business and identify areas where we can create those models, and immediately you're going to see impact in your numbers.
Yeah, I mean, I understood that sort of some time back, but what I really found was that the business where I can scale or getting repeatable business is not really the profitable business because it's happening in India. And I realized that we were doing more and more, but it was not really contributing to the bottom line. So that's when I said I have to move out and move internationally and get into other countries. And so that's why the product.
So if the criteria is to get more of the profitable business that can also be repeatable, if you want to do the international business and if that's where the higher profitability and everything is, that's the market you want to go after, still you have to put it on a repeatable path. You know?
Yep. So that's what you're doing. So we've pivoted only a few months back, or I'd say 6 months to 1 year back, and that's kind of paying dividends in terms of working with partners and getting more business done.
Yeah. So I think that you need to, put all the pieces together so that you can really make it a repeatable and scalable process on that front. Right now, the state of the business as it stands currently, I don't think you would get funding as it stands. But you do need you're going to need to package it up and show that you can get to that repeatable path, and this is the repeatable path, and this is going to be the trajectory of growth and so forth. And those things need to be in place for you to even have any funding discussions. I wouldn't waste time having any funding discussions right now.
Yep. I'm also staying as bootstrap, but one of the points I wanted to get to know was, on the RAD APAS business, I think which is really fueling everything that we have done. All our products, all our solutions are on using the RAD APAS that is internal. Given that we already have public-facing products, what is your opinion on that product? I would say that
on that topic, that thing I heard when you were pitching your customers and everything, you said there was one customer where you did 11 applications, right? That is a great situation where your RAD and application pass is helpful. That's the only reason you can do that, right?
Yep, we wouldn't do it otherwise. Yeah.
Right. So I would like to, if I were doing strategy on this, I would try to understand very granularly exactly what went on in that market and figure out how to make that business scalable and repeatable.
Okay.
Okay. So if there's one thing I want you to take away from this session is go really deeply understand your $100,000 deal, 11 applications, and figure out how to make that your core strategy.
Yeah, it started as a HR product deal and then kept expanding. So if someone had sold it as a conventional SaaS, they would have got one order and left. We went in with the HR, got in there as HR, and expanded to 11 applications. That's where the strategy of having a product with services around it works.
Yeah. And that's what's differentiated about what you're trying to do here. So that's that one you're going to need to figure out exactly how to build a business around that strategy. And that business then will scale a lot faster.
Yeah, I think just to the question, I think it's in some ways similar to Force.com and Salesforce.com. I mean, they have an internal Force.com which they made public sometime later, and they had sales CRM. We've got a HRMS, and around that and an ERP. Around that we could give a pass and give it public, except that we probably do it at far more affordable rates. Is the thinking I have.
Yeah. So you have to, play that out a bit. You have to get, now you've got one deal like that. Try to get, 10, 20, 50 deals like that. And the good news about that business is that is something that you can organically develop. And if you see that you're able to grow that business fast enough, then would come the question of funding.
Okay.
Right now, you're going to get caught in the strategy discussion, you're going to get caught in the growth rate discussion, and it's going to be a waste of time to have funding discussion.
Yeah. Okay. I haven't spoken to a VC for a very long time anyway. So.
Don't worry bother right now. Okay, good. Ravi Nutala, you're for next.
Hi. Great. Thanks a lot, Sharma, for the opportunity to present here. Yellow Messenger is the product and company that I'm going to talk about. So we are really early stage. It's just been 4 months since we started this. So what's Yellow Messenger? Yellow Messenger is an instant messenger connecting businesses and consumers at the core of it. We can move on to the first slide, maybe. So what does Yellow Messenger really aspire to do? I think there is a lot of communication that happens between consumers and businesses, and it's kind of spread across different platforms and tools, and there are certain issues with the existing communication systems that are used. And Yellow Messenger really tries to make the communication and transactions between consumers and businesses and brands fast, easy, private, cost efficient, and targeted. I think these are the 4 or 5 areas that we figured out there are problems, and we are trying to solve that. Can probably move on to the next slide. So I think how did this idea really come around? I think it's been with my own personal experiences. It started off when I was traveling to a new place. I had to really contact 4 or 5 different hotels because I was late for a day, and I was trying to book something instantly. And one way of doing that was to really I needed to download those 5 apps or have a phone and really type in, and with that internet speed, able to really really figure out what are the hotels around and call each of them, stuff like that. So where at the end of it, I kind of SMS my friend saying that, okay, can you figure out what's the cost of these hotels and get back on where there is a vacancy, right? I think what I figured is it would have been great if I would have been able to really message these different places, get responses, compare prices, and immediately decide it would have been just done in a minute. So the convenience that I get in my personal communication while I'm using WhatsApp or these instant messengers is not available while I'm talking to these places, right? And I think that kind of extended even when I was buying products. So I think a lot of the e-commerce websites right now are FYI discovery plus finding, discovery plus the transaction. But let's say I know that I have to buy iPhone 6 and I'm meeting a customer. He's delayed by 5 minutes. I try to do a transaction really to buy a product which I'm 100% sure which I'm going to buy. So that was taking a longer time. I again load the app, internet speeds outside with 3Gs and stuff, and really finding the product and completing the transaction. Whereas it could have just been done with a single message to a e-commerce company, iPhone 6 order, because I know the product, I know the price. I'm just ordering right off the bat with a single message, and with the cash on delivery and systems like that, every information is conveyed, and you're not really doing a payment transaction as well, right? So that's one area I think that came about. And even in terms of communicating the products that you want, I see a t-shirt, I see a shoe, I want a similar one. I want to communicate it to the business whether there is a similar product. Again, there isn't a really easy communication channel. It's right now like a big shopping mall where you go through different things, select one and go through the payment, whereas I think a direct messaging model would be where you already know it and you tell the counter, okay, I just need it, get it done fast and deliver it, right? I think these are a few problems that I faced, and it really felt that it's a nice a nice solution to have easy communication model, which is free. I'm not sharing the number, which is private with the businesses. And then went about and kind of talked to quite a lot of friends, people about the problems that they see. I think with kind of contacting business numbers. Another thing that really came up, people are frustrated, is that they share the numbers to these businesses. They call them, they know the number, and they start getting the email campaigns or SMS campaigns all through. So again, it's not able to keep their numbers private, and so I think that's one more problem that I think could be solved. So I think we can move on to the slide. So here the consumer business, as this slide shows, there are different platforms that are right now being used, and there are these specific problems with each of them right now. I think we can move on to the next slide because we've probably covered this part already. And I think what is also changing, not only in India, across the world, is I think consumers are reaching to businesses more and more through mobile rather than desktop. And even from the businesses side, reaching to the consumers, still the biggest, the highest success rate in kind of getting the promotions to the consumers is still on mobile, and it's on SMS. So that's one area where I think there's a lot of amount spent by businesses in reaching the consumers as well. And typically the way that the consumers approach businesses in mobile is one by regular searches, or second is through apps. So I think so one of the studies and stuff is customers are really reaching out to businesses that are readily available as apps rather than really searching, going through the browser, finding it out. And if they have an app of a company ready, I think that's what they go ahead and immediately contact or immediately communicate. And again, there are only 20-25 apps on the phone that people use, and there are so many businesses that are out there that kind of provide their value. And one of the thought process was really to have a aggregation system of this chatting with all these businesses and discovery. Right?
Raghu, I'm going to stop you there for and just kind of start to peel the onion here a little bit. What are you proposing to do? Are you going to use one or more of the existing messaging applications and put something on top of that so that you can actually do e-commerce transactions from a WhatsApp example? Is that what you're proposing?
No, Sharma. So what we have already is it's a Yellow Messenger is a messaging platform by itself, but it integrates a lot of APIs from the listing places. For example, right now we have integrated with Google Places. So essentially the way it works is you log on to the Yellow Messenger, you search for any business, place, or something that you really want, like a restaurant, and you have all the listings that basically come up out there with their reviews. Right now it's on Google Places, but I think the plan is to integrate Yelp and a few other APIs. And then you open up and start messaging to that business. And the plan is to, the overall goal is to have the businesses respond to this, but since we don't have them registered onto the platform yet, right now we are putting up a call center where I think we assist the businesses in kind of help with the responses to the consumers. So I think that's what it is. It's an app where it's not tied to a existing messaging app.
So you, right now, your call center basically responds to these messages.
That's correct. That's correct.
And who's paying for this?
So we are paying right now. The volume is not a lot. So right now we have around 500 users that are on this system, and we kind of get around 5 to 10, and we are.
build? Who's going to be paying for it? What is the business model here?
Okay, so the business model here is the subscription-based model. So right now, as the businesses start getting leads, so the plan is to really have the businesses pay if the responses are going to be more than a certain. So let's say we have a business and they are getting leads from this process for certain queries or for certain products. We basically charge, the plan is to have a subscription model where they respond for 50 for free, but going forward, the leads are going, the responding to the leads is going to be subscribed by them. And the second way is like a just dial model where you get you get a query from the customer and the business proposes only certain solution, and we also propose other vendors that he can basically consider for this. And you have the communication from the businesses to the consumers. So the way that it works is one part is the communication from consumers to businesses, and the second is when businesses want to basically promote or provide offers or communicate back to the consumers. So let's say you have at a point of time when we get to 50,000, 1 lakh users, and the businesses need to communicate their offers and promotions to these consumers. That's what they basically pay for.
Okay. So right now nobody's paying. You don't have revenues yet.
Right now, we don't have revenues. We just signed up for a promotion with a business, with the e-commerce, sports e-commerce company, and since these 500 users are really located in a small locality, they agreed to kind of co-collaborate and promote their sporting products to these consumers where it's listed as offers, and the consumers can go back there. So we have a commission-based model on that. So that's still to be done. We are doing it for the Diwali promotion, and I think that's really an experiment on how far we can get with that.
Okay. And as far as this business turning into revenue, what's the schedule? Based on the numbers you're saying, the downloads, etc., what is your sense of how long will it take to start generating revenue?
So for generating revenue, I think if by next week, if we start seeing some traction in, so this is the first experiment that we are really doing in a way of business contacting back customers and listing when on the app, and I think if this succeeds, I can see that I think there could be revenue in the next 2-3 weeks as well. And we just need to really try out that model. In case
hold on, these 6 people that you have working on the business, all of you are still holding on to your jobs, yes?
Yes, all of them are on their regular jobs, and everybody's on equity. So for us, there isn't really any cash burn till this point. We're on Google Cloud, and I think there are a lot of offers in general. So till now, I think we haven't spent any money. We probably spent 15,000 rupees or something. I think we essentially we haven't spent any money on it, and yeah, I think that's
what's based on the kinds of things that you're trying to do. If you can do it while keeping your jobs and getting the product out there and validated and into revenue, it would make it a lot easier for you guys to then quit your job. So this is, as you probably know, it's something that we support very actively in 1M1M, Bootstrapping with a Paycheck. In fact, you will see our new book coming out on Bootstrapping with a Paycheck in November.
Yeah. Right. That's correct, Sharma. I think I tried the model where even hiring full-time people, the problem is, I think, at least in India, it's very tough to hire full-time people with very high quality into startup, which obviously this is just 4 months and you don't have the credibility, right? But when I'm looking at this model where I'm hiring part-time people, there are 2 advantages that I see is So all these guys are working in Amazon and Microsoft and Myntra. So these are really experienced techies who have built products and who have built things. And their aspiration is to be really part of something that is bigger, and since they have their day jobs, they're okay working on equity, and they're okay contributing on this and kind of pushing through. So to get the same quality of people on a full-time job for a startup is very tough.
Good. So keep going. I think this is good maneuvering. You're definitely managing the process well. Try to get to the heart and core of the business, basically, which is essentially getting to a point where people are paying for those leads. So you need to match up what kind of products, services, and what kind of leads can you generate for the businesses who are willing to pay for it. That's the, it's a relatively simple logic, business logic. So get that validated as much as possible, and hopefully you will be able to get it to revenue, to substantial revenue, so that you can then gradually take the path of quitting your jobs and so forth. But for the next 6 months, this stuff takes time, as we discussed earlier in the discussion time. Everything, especially when you're dealing with a slow-growing market, it takes a lot of time. So this may take another 6, 12, 18 months for you to work in this mode, and then we'll see where you are.
Yeah, sure. So one question I had, Sharma, is right now I think we are doing this pilot both here and the U.S. market as well. We're selecting New York because we have one of those guys is basically stays in the U.S. and we wanted to see whether this strategy is correct to kind of do the prototype or initial validation in multiple markets, and because I think metros in India would be ready because you need probably smartphones and even reasonably IT savvy businesses for this to really take off. Whereas the appetite for that is probably bigger in the U.S. market, and I think as I put the competition, right, I think as when we started off, we were validating and all that stuff, but I think in between path started almost a similar concept out there, and when I go and look at it, I think the reviews and stuff, they validate by themselves, saying that yes, I think people are looking for similar. I think PathTrack integrates Foursquare API, whereas we are using a Google Places. That's probably the overall difference, but I think essentially the model is the same. So I just wanted to get your inputs on how do you think we should actually look at it from even in multiple markets perspective.
If you try to do this in the U.S., the thing that is going to be complicated is the process of selling. And this, if it requires that you have to talk to all these businesses that are going to be your customers, then that requires a sales force. And
right,
it's very hard to do in a bootstrapping using a paycheck mode.
Right, but don't you think this can be purely online selling? So the idea is to really put it out. You have call centers anyways that are experienced in talking to the U.S. consumers and stuff, and probably if you build 50,000, 1 lakh consumers using this without any revenue, but you're supporting it with the call center out based on India because they are experienced in dealing with the American consumers, and from then on the plan is to really integrate into platforms like Hootsuite, and where you don't go to each and every US customer, but you kind of put it into platforms that the businesses are using, like an app on Hootsuite, things like that, where you get a lot with a single API or single integration.
It all depends on your software design. That all depends on whether your customers respond to it or not. So it's, conceptually, you can say anything. You can paint the sky red, but you're going to have to. I have no idea what your capabilities are in terms of software development or user experience design. One thing Ravi was saying earlier is that mobile first level of user experience design, India doesn't have a lot of user experience, simple user experience, usability design experience. That's something, you know, when I look at products that are from India, generally the user interfaces and user experience design is not very good. So that's an area that needs a huge upgrade. So I don't know what your experiences are, or your team's experiences in terms of designing software that can operate in a pure self-help mode. That those kinds of things have to be looked at. And you know, my suggestion, based on what I've heard so far, is all these ideas that you have in your head, start testing them, start putting them into practice, and start validating, because I think in a business like this, concepts are going to be hard to sell. You're going to have to show what's working. Yeah. You're going to have to show evidence.
Yeah. Absolutely, absolutely. That's correct. Great. Yeah. Thank you. Thanks a lot.
You're welcome, Ravi. Good luck.
Thank you.
Yeah? Really? Where is Priya? I see Priya's name on the panel, but I don't hear her. All right, well, we're going to move on, and if Priya is back, we'll see if we can come back to it. So let's take a few minutes and explain to you.
Her on mute, so I just unmuted her. Sorry, we were hearing feedback on her line today. She's there.
Okay, Priya.
Hello, can you hear me?
Yes, please go ahead.
Can you? Hello?
Yeah, please go ahead.
Oh, okay, sorry. So thanks, Sharma, for giving me this opportunity to present. So, 1 second. Yeah, so basically, so what we are trying to do with Propergy is we are trying to build a pro-buyer research portal for the home buyers, which basically we are trying to provide research analytics platform for the user and to solve the problem of selection. Next slide, please. And our vision is we want to inject trust, transparency, and professionalism. And how do we want to achieve it? We want to provide fact-based research analytics reports that holds the buyer's interest to 6%. And we want to use that using a technology to scale. And how we are doing is we have built a dashboard, which I'll show a few slides in it. Next slide, please. Yeah, so the current customer pain in India is in terms of buying a property is like there are too many residential projects in India. There is no objective way where a user can compare and be trusted that this is the right choice for me. There are a lot of listing sites, and those listing sites are creating more confusion and more choices. And then there are a lot of marketing sites where the brokers try to hard sell properties in order to maximize their brokerage. Now, how does a buyer find the right property? How does he find that whom he can trust, who can solve the problem of selection? So there we are trying to fill a gap. Next slide, please. So we are trying to provide an online research dashboard where we are trying to provide the buyer with different analytics, which basically includes the price point analysis, which answers the question like, am I paying the right price? And this price point analysis does a detailed comparison of projects with surrounding projects so that he can actually find out when to enter, when to buy a property and what time to exit a property. Then we also provide a builder review, which basically shows whether the builder is good, whether what is the average delays he has been doing in delivering the project, what has been litigation history. Then we also provide the locality review, whether the locality is good to invest or not. Then we also provide the forecasting returns, which includes what is the appreciation of that project, like in 3 years or in 5 years. What would be the estimated rent after completion? What would be the market liquidity of that particular project? And lastly, we provide the legal and construction quality updates. And then this whole is a in-depth analysis of a particular project. So let's say if I'm a buyer and I want to buy a property, then they come to us and then we kind of provide them unbiased independent analysis of that particular project based on these parameters. And then we also use scientific methods to score project, builder, and location. So they can that actually helps them in solving the problem of selection. So when we rate like 7 for a project, we rate 7, and the other project we rate 8. Then we do provide him an analytic reason why we have rated this 7 and why we have rated 8. So he gets like an entire comparative view online, and he can make a decision online. Next slide, please. So this is basically a snapshot, like some demo of what we are trying to do with the research dashboard online. This is a snapshot of like of a property which provides a project summary. Then we have like project description, and then we have where the project is located. Next slide, please. Then we have price comparison. So in the price comparison, he can actually compare the project. He can compare the project with the nearby properties. What would be the neighborhood overview, and then what are the surrounding properties in the area. Next slide, please. The third we cover in our research report is the appreciation analysis. So what is the appreciation potential of that particular project? What is the price movement of that particular project since it launch till date? Then we also provide him expected appreciation, like in 3 years, what would be his expected appreciation, in 5 years, what would be his expected appreciation. We provide him information on such as existing infrastructure in that locality, future infrastructure, rental income, and market liquidity. Then like the other demo versions are included are locality analysis, which basically includes like what are the infrastructure in that particular locality, what are the government plans coming up, what is the prices or the average inventory in that locality. Then we have builder analysis, where we kind to analyze the builder, where we provide a case history of that builder, what has been his average inventory delays. And then the last section is the watch out, which basically includes the project risk, builder risk, and the locality risk. So it's a combined analysis of micro level in-depth analysis of a project we provide through this platform. And our business model is a subscription-based model where we charge customers based on different packages. We have a home buyer package and an investor plus package. In home buyer package, we provide them 2 reports, and then in investor plus, we provide them like 5 reports, and it varies from 5,000 to 10,000 rupees.
And when you say base model, it's 5,000 or 10,000 a month. What's the
so it's 5,000. It's for a particular, like if I'm a user and if I want to buy a property, then I will come to my site. I'll come to that site, and then I'll subscribe to that particular package. So 5,000, the validity of 5,000 is for 3 months, and the validity of 10,000 is until for a year. That's what we have set. So 5,000 is for 3 months, and 10,000 is for a year for now.
In that pricing, you can get this kinds of reports for unlimited number of properties, or it's just 2 reports for one particular?
So in 5,000 package, you can get two research reports, and in 10,000 package, you can get 5 research reports. But then if you're like 5,000 rupees subscriber and you want additional reports, then we charge extra. We charge like around 3,000. We charge around 1,500 rupees per report. Similarly, we have same parameters for 10,000. I think it's 1,000 rupees per extra report. Then we start, just to give you a sense of where we are today, we started last year in August 2013 with a team size of 4 people. Now we have team size of 9 people. Leads, we have almost 3,500 generated so far in a year, mostly through SEO. We have spent very less in the marketing. And we have developed close to 100+ research reports for different projects. So before actually building this dashboard, we tested out this by putting a PDF version of our report for few projects, and those reports really went viral, and the customers were asking, customers were referencing it and like sharing with their friends. So then we came up with this online version so that we can actually scale faster. So this online dashboard version we launched in July of this year. So it's been 3 years, and now everything is online. So we have payment gateway and everything in place. So last 3 months, we got 20+, more than 20 customers who actually paid, and there are more than 50 customers whom we are giving a demo to use the dashboard.
Okay. And these 20 customers who are buying, who are paid customers, are they on the $5,000 5,000 rupees plan or the 10,000 rupees plan?
Mostly on the 10,000, but it's a mix, both 5 as well as 10. So mostly 10,000. Next slide, please.
How are you financing the company so far?
Until last year, I bootstrapped it, but then recently, 3 months back, I asked few of my friends to, I raised funds from them, so it's a little bit angel funded. So now we are looking for like seed fund, if we can raise some seed fund. And also, the 2 places where we are looking help is how to expand our reach, because the model has been proven. We have seen like people are willing to pay. So where we are struggling is like we want to expand our reach. And the second thing we also want, where do we get seed funding from? Because most of, I've been talking to a lot of investors, and they take this as a consumer technology thing, and they are more prone on like investing in the totally tech-based company. So these are the 2 areas where we have been struggling now. And this is just competition. So there is no, so we are basically providing B2C research. So there are, so in India, there like B2B research exists, like lots of firms like Cushman & Wakefield, Prop Equity, John Lang & Son, they all are providing B2B research. Then there are advisory firms like Prop Tiger and India Homes and listing sites, but but still there's the problem of selection is there. People are confused, and there is no B2C research firm exists. So
they're kind of getting to the end of the time, so I'm just going to give you some quick feedback on this. One thing that no investor can make any decision until you show them how they're going to make money. Investors have certain requirements that they need to see in a business plan presentation to be able to make assessments. And you know, if I put my investor hat on and look at this, I cannot make those decisions because I don't have the information that I need to make those decisions. I need to see a bottom-up TAM analysis. I don't see that. I need to see, you know, what kind of pace that this business can grow at. Venture-style businesses, to raise seed funding outside of the friends and family financing which you've already raised, if you're looking for professional funding, they're going to look for a hockey stick growth curve. So I need to see, based on your TAM analysis, based on your customer acquisition strategy and so forth, how do you get to a hockey stick growth curve? If you can establish credibly that you can get to a hockey stick growth curve, there is going to be seed financing. Otherwise, there's going to be no seed financing. You're going to have to bootstrap the business.
Okay, got it. Yeah, I did not put all those slides because it's short presentation. Yeah, thank you. Yeah, this is a good advice. Thank you.
So you need to put those things together if you want to actually. I can't make a decision whether this is fundable or not. I have not seen in anything to make that decision or make that call. Without seeing that, it's me to advise you what is the likelihood of getting financing.
Okay.
So folks, if you like what we are doing here in 1 million by 1 million, our request to you is spread the word and bring up serious entrepreneurs who really want to be successful, whom we can work with and make them successful. Because as we discussed several times throughout the course of this presentation today, it's very, very difficult and time-consuming to build a business. It takes many years, it takes a lot of resilience, lots of patience, and you know, we need entrepreneurs who have that kind of resilience, that kind of patience. It's not people who have unrealistic expectations of overnight success who are going to build really serious businesses. So resources-wise, everything is at 1mby1m.com. You will find a very active and very rich blog that you can learn a lot from. The Entrepreneur Journeys book series, we've already published 10 books. You should be able to use them to, you know, double-click into each of these topics, whether it's bootstrapping, positioning, feminism, that's the women entrepreneurship book. India, we have a book called Feed India that specifically focuses on the Indian ecosystem and gives you perspective on that. Bootstrapping using services is a technique of bootstrapping that we use a lot, and we decided to publish a book on that because it is an important tool in an entrepreneurial journey. Web 3.0 is a very active category where we're seeing a lot of entrepreneurship. Cloud, Carnival in the Cloud is the book that we are launching this month. We launched from e-commerce to Web 3.0 last month. These are areas where there's been a lot of serious entrepreneurship, and we have been able to learn a lot from that. So that's why we are highlighting specific learnings from each of those categories. There's lots of videos, FAQs on the website. You can, you know, evaluate the program using those. These roundtables happen every Thursday at 8 a.m. Pacific, so please come back, bring your friends, and continue to use the session. The free public roundtables, you can register on the page with all the registration links and everything on the blog, on the website. Our premium program is a $1,000 annual membership fee. We offer you extensive methodology guidance, full curriculum. We help you with business development. We help you with strategy consulting, and we help you with financing as well as working with the media to get your message out there. The $1 Million Club is a link where you find success stories of the program. The ROI equation is $375,000 plus 5 to 10% equity worth of value for just $1,000, no equity. So we are happy to work with you over many years, and we have a lot of entrepreneurs who stay in the program for many years, repeatedly using the program to grow. And you know, businesses don't get built in 3 months. So if an accelerator that has you for 3 months can only give you so much, we have a much more long-term perspective on really staying with you through the process of business building. The self-assessment is something that we recommend that you use and take a look at and calibrate your business against, because those are the kinds of questions that you need to ask yourselves. You go to the website, we have tons of information about the premium program, evaluating whether or not to join the program. You will find lots of information there, lots of video FAQs and so forth. The curriculum that we teach has been built with 600 plus experienced entrepreneurs participating in the program, as with their case studies, their entrepreneurial journeys, as well as their advice and lessons from the trenches. So you are essentially in 1M1M, you're standing on the shoulders of over 600 successful entrepreneurs who are teaching you their experiences, and I'm teaching you mine. So it's a very rich methodology and very rich curriculum that people are really deriving tremendous value out of. The core curriculum has 7 specific modules: bootstrapping, positioning, market sizing, customer validation, financing, customer acquisition, and team building. And then we have a whole bunch of electives, Web 3.0 and e-commerce, cloud computing, outsourcing and consulting, mobile and social apps, healthcare, IT, online education, etc. Our methodology is lean, capital-efficient, bootstrap startups. And even if you're going to go on to raise funding at some point in your evolution, you will need to bootstrap the early phases, and we are very mindful and respectful of that reality. So we teach you a lot about how to do that part of your journey efficiently and successfully. We do generate a lot of coverage for our premium members through our clout in the media and our social media clout as well. So you will be able to access all our marketing channels to be able to get your message out there, including our blog, Twitter, Facebook, LinkedIn, everything. We do have an affiliate program. If you're an entrepreneurship development organization interested in working with us, we do offer a 10% affiliate fee. And we have free roundtables coming up pretty much every week until Thanksgiving. So there are 5 more roundtables before Thanksgiving, so feel free to book your slot. Vision India 2020 is a book that has $45 billion business ideas that you can, steal, borrow, morph, whatever you want to do with it. It's an ideation book. It's an interesting book. Incubator in a Box is our platform using which a lot of other players, both corporate partners as well as other investors and incubators, entrepreneurship development organizations are either launching their own incubators or expanding their incubation capability all over the world, tying directly into Silicon Valley, which is our home base. So again, today we are launching Carnival in the Cloud, celebrating the launch of this book on cloud computing and entrepreneurship within that realm. We've also last month launched From E-commerce to Web 3.0. Check out that book if that's your domain of interest. And these are all entrepreneur journeys books with case studies and lessons from the trenches, essentially. Unfortunately, we are out of time, so do not have time to take questions today with the call-in. However, I will introduce you to Irina Patterson, who will answer questions about the 1M1M program. If you are evaluating the program and would like to join, call Irina 786-301-2456, irina@1mby1m.com. Her Skype is irina_Patterson. That's pretty much it for today. So thank you for coming, and I'm sorry we do not have time for Q&A today, but we will see you back here next week, and we will continue on with more discussions and more entrepreneur pitches. Thank you so much for coming. Bye-bye.